National Treasury Cabinet Secretary Ukur Yatani has signed regulations allowing persons to utilize 40% of their pension benefits capped at 7 million shillings to purchase a residential house. The regulations, which now await gazettement, follow amendments under the Finance Act of 2020, which seeks to unlock ownership of homes for many Kenyan households. As Judith Cherono tells us, however, some industry players argue that this should have been done differently.
On the 14th of September, Treasury CS Ukur Yatani appended his signature to the much-awaited mortgage amendment regulations of 2020, allowing persons to access a portion of their accrued pension benefits to purchase residential houses. It is an attempt to help Kenyan households purchase houses in an environment where the mortgage penetration rate is low, with only 26,000 mortgages. Some stakeholders in the pensions industry, however, feel that the government should have taken a different route in catalyzing home purchase.
We have proposed to government that this should be done through using pension saving as a collateral or security for a housing loan from a mortgage institution, or having a cash-backed loan from a pension scheme. To me, that makes more sense, rather than saying you can access 40% of your pension account now.
The regulations signed by Treasury Cabinet Secretary provide that one who wishes to tap into their accrued pension benefits to purchase a house will have to apply to the trustees of the pension fund in a manner prescribed by the scheme. Trustees will then be required to make a determination on the application within 90 days, with the requirement that any application turned down be accompanied by a written explanation to the affected persons.
We have suggested to the regulator that, look, even if you do this, make sure that over a period of 3 years, not more than 10% of the money in a pension fund can be pulled out, so that there's a safeguard on, you don't want to create a run on pension funds.
This comes just a week after the Central Bank of Kenya licensed the Kenya Mortgage Refinance Company to kickstart operations aimed at facilitating access to long-term and more affordable mortgages in the market. KMRC has 35 billion shillings in seed capital secured through funding from the World Bank and the Africa Development Bank.
If we can do something about looking at those interest rates, and this is where the Kenya Mortgage Refinancing Company comes in, I still feel the first prize is try and make mortgages more affordable.
With only 20 out of every 100 working Kenyans enrolled in a pension scheme, however, many will still be locked out in the now rolled out program to ease the purchase of houses. Judith Cherono, NTV.